Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is July 7th, Thursday, July 7th, and what a week it has been. This is our last session ahead of the Eid break, the Eid al-Adha break. So happy holidays to all of those who are celebrating Eid. That's the whole of the Middle East will be shut down over the next week or so. But nonetheless, we go into the Eid holiday with a really dramatic backdrop. Oil prices have, I hate to use the word collapse because it's still $100 a barrel, but nonetheless, a serious decline. There's so many forces in play, it seems. Let's go to Sydney in Australia with Peter McGuire, CEO of XM Australia. Peter, there's probably many factors in the financial markets to point towards. It seems to me one of the big ones is again the soaring dollar, or perhaps the other way to look at it is the declining sterling and euro, and yen is already well below par. All of that putting a greater weight on the burden of energy prices.
Absolutely, Sean, and good morning to everyone. 106.87, Sean. I'm just seeing a read now. We're nearly at 107. Who could have imagined it as far as the ballistic move to the upside for that US dollar index? If I'm looking at the pound of 119 and what Carol's saying, many analysts I'm talking to are saying a 113, 115 over this summer period. So, wow, there's going to see further downside for the pound with uncertainty there with Johnson and his troop. And the other side, which is one of much interest, and I'm looking here at 102.10 for euro. We weren't that long ago, Sean, and it was 122. So, we've just seen a capitulation. The yen hasn't moved. All the smart money's dumped euro. The yen's taking a break after a 19% washout over 6 months. So it's having a little bit of a holiday, and all the smart money moved to US dollar long, naturally euro short. Energy prices, I noticed $11 stripped out yesterday or Tuesday in the States. Tuesday trade. So that really is catastrophic. And the Brent market was, collapsed down. So yeah, we've got Brent now at 100. I think there's structural weakness as far as recessionary fears, and everyone's worried. I'm interested to see non-farm payrolls tomorrow night, Sean, how that looks. And if it's softer than what we expect and those recessionary fears, then yeah, maybe we're going to see a further downside for crude this week.
Peter, I suppose also that's maybe weighing down on the expectation for demand outlook is China isn't really showing the muscular recovery from the first half of the year that we have, that some were expecting big stimulus and going into Xi's coronation for president for life, that it was going to be money for everybody. That doesn't seem to have really transpired.
Exactly right. No, exactly right, Sean. And I'm just reading commentary as far as certain cities are, looking at further lockdowns or reintroducing. So that's not a good sign. And I was talking before the show started with Walter, as far as how the world seems to be opening up, but there are many parts of the world that aren't opening up as quickly as others. And so this is the great issue from a demand side. China is a little bit of a laggard at the moment, and they're certainly far from being the knight in shining armor to save the world or save, from a demand side and to get everyone producing more. I don't think China's showing any green lights or green shoots at the moment that are that favorable. And we've got to look at other markets. That's where, the iron ore collapse, copper collapse, a lot of the base metals have really hemorrhaged, and maybe they moved quicker and oil sat on its hands, but now even that's starting to have quite a large retracement.
Peter, just to come back and get your thoughts on the earlier point of what it means for China, this bionic dollar. Obviously, the Chinese manage their currency in a very tight band, but what does this big dollar move, how does it impact China, do you think?
Well, it's 20 years since we've been at this sort of number, Sean, 107. We did hit a 120 in 9/11, so that's just over 20 years ago. This is really uncharted territory in a lot of ways. Over that duration, we've had, a dollar that's been much softer, and now with a very strong dollar, it's going to have, I no doubt believe, some reverberations felt internally in China, and I'm curious to see how that all plays out over the next 6 to 8 weeks, because we all understand the strength of that dollar and the impact it's having to many Asian economies. And I think it's going to be a fairly hard grind out for the likes of China and a number of those Asian counterparts.
Peter, just picking up on those kind of recessionary concerns and oil price, the idea that the oil price decline, obviously it was sitting above 120 and around 120 for a period. It's now obviously down around 100. I'm wondering how much of the work for the Fed is being done by the lower oil price, and where the financial markets might assess that the Fed and others may pull back from the Bionic sort of tightening that was foreseen. What do you see those two things impacting each other going forward?
Well, I think the first sign, Sean, is going to be tomorrow night and what we experience as far as that non-farm payroll. The second one, of course, is as the Fed have taken a front load aggressive stance, and many other central bankers across the world have, the issue quite simply is that you're now seeing third quarter 23 as a rate reduction cycle being commencing. This is only a year away, and that's what the forecast is. So there are many central banks are now saying that they'll be going in the second half of 23 loosening rates. So this is the dilemma that we're facing: stagflationary fears, recessionary fears, which are mounting daily. That's the noise that I hear across all the analysts that I talk to across the globe. Everyone's saying they're definitely worried about out of control inflation, recession, and economic growth leading forward. So I think it's going to be a tough ask, and I'm not sure how aggressive Powell's going to be come August or September. We've just got to wait and see where crude is, and if it's sitting at $80 a barrel, it's going to be a very big, slap on the back for him. It's going to help him tremendously.
Peter, your sort of outlook for the next 10 days, and particularly when it comes to the financial markets, we're seeing the equity markets after what had been a sort of really bad first half of the year but mainly in the first half of the first half. In the last few weeks, it seems to have stabilized a bit. What are your thoughts on the outlook for the financial markets?
Well, I think it ran out of steam, Sean. Like any market, it was probably pushed down too heavily. A lot of traders then jumped on US dollar. I think over the next 10 days, I won't be surprised to see a 96 handle for Brent. I think gold will test probably 1720. US dollar index a 109. I'm going out there because it's at 107. I'll go 107.50 to 109, that sort of range. I think there's further upside. And I wouldn't be surprised to see a little bit more of a bounce to the upside for some of those US equities and global equities, because I think they've been pretty heavily sold off. So I'm just thinking maybe 1 or 2%, but they're going to be volatile. And it's an absolute wonderful ingredient for traders.
Do you expect parity on the euro to break through parity?
I don't know whether a breakthrough, but it's at 102.10 at the moment, and I won't be surprised to be a 101 to maybe a 100 or 1050. So I think, yes, Sean, I think further softness for naturally the US dollar a little bit further upward, onward and upward. And
Well, let's wrap it up there. What I'll be watching over the Eid, not the most pleasant thing in the world, but the progression or lack thereof in Russia's war in Ukraine. Russia has had some very significant victories. Finally, one might say, after 4 or 5 months from their perspective, a horror show from a Ukrainian perspective, but nonetheless, they've finally taken half of the Donbass provinces. They're going after the other, likely to take that over the coming week. And then what? The two big provinces that Russia has always had their eye on, that they've had occupation in and militias operating in for 7 years now since they took Crimea. So finally, they're going to secure them in a military way. Then where do we go from there? That moment, I think, will be a defining moment. Do we then point towards the end of the war, or do we then point towards, no, we're going for more? If it's the more piece, batten down the hatches. If it's the okay, we're done, we're satisfied with holding this, and if where that goes, I think that will be a determining moment. That could happen over the next 10 days. I would suggest keep an eye on that, because that could dictate the direction of a lot of things. Thank you so much, Walter. Carol, enjoy your weekend of entertainment from Boris Johnson. Will he or won't he? Nonetheless, it's Sky News at its best, keeping us entertained. It's unfortunate that it's entertainment, because my goodness, we all know that Britain is facing many different challenges, and it's so important to Europe that Britain is strong, both in all of its politics and all of its economics, as such a critical country. And thank you, Peter. Have a great Eid break. Not that you're doing Eid in Australia, but nonetheless, I'm sure there are many people that are. Best wishes to everybody there. Walter and Carol, thank you so much. All the best. We'll catch you on the other side. Cheers.
Thank you very much, Sean, and Eid Mubarak.
Thank you, guys.
Eid
Bye,
Mubarak.
Carol. See you, Walter.